My view is cyclically, as the economy starts growing properly, you tend to get a weaker dollar. I think once we've got tariffs plus a reduction of deficits, we probably end up with a very strong dollar 2026, 27.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal dives into the billion-dollar opportunities in crypto alongside Dan Tapiero, exploring institutional adoption, DeFi advancements, and macroeconomic shifts. Let's catch up with them to learn more.
We had similar under Reagan, the dollar went down because they wanted it. So, my general view is the dollar is in a secular bull market, but cyclically, they want it a bit lower.
Okay. So I had been bearish on the dollar for a while, and my view is sort of changing now. I may be wrong. I may be wrong about it. I haven't been a dollar bull in a very, very long time. But I think this is a structural one-off shift up. And no government can compete with the government we have today. And there aren't companies like the ones we have in the U.S. outside. I mean, I see it even in the crypto space. A lot of the volume is outside of the U.S., 80% of it right now. But not as many, quality companies outside as you would hope, given that they're 80% of the total trading volume. Total active addresses across top blockchains.
Oh, yeah, that's just stunning.
I mean, like we looked at, I don't know, 1 million charts in our career, and I don't know that I've ever even seen one like this. 164 million active addresses. Some people, question this data. We've done a lot of work. We think this is the legit data. 6 million in January of 21, right? Total active addresses across the top blockchains. And it stayed at it was 20 million at the beginning of the year, and it's just spiked up to 164 million. So we're up, almost 7x this year. We're up, 3x in the last 2 months. These are massive, massive numbers. So when I think about, adoption, it's not just people owning a Bitcoin. It's how widespread is the use and interaction with the top, 5, 10 blockchains. And so this chart encompasses all on-chain blockchains, including swaps, purchases, airdrops, NFT, signing transactions, et cetera, et cetera. I mean, it's everything. It's how much activity is moving into the digital asset sphere. So I don't know.
It's massive. The acceleration in the trend is just vast, and it's only going to get bigger because we've just unleashed a new understanding, which is like these AI agents are likely to use blockchains, and they're infinitely scalable in numbers. There's no limit to the total population or whatever. There's infinite, and you can start to see how much activity can go on chain, as you say, because so much of the world is still off chain, and this new government and what everybody else is doing is just going to bring more and more of this activity. Once you bring all driver's licenses on, all digital IDs on, if you put your digital ID in the US on, that's 370 million users come on immediately. They're not using blockchains as in buying and selling crypto. They're using the rails for proof, which is that trust layer you talked about. AI has been fast, right? Really, really fast. But nothing like this, certainly nothing that is financialized. AI is not financialized. This is financialized, and it's growing at a pace. When I just look at the larger measure of active addresses, again, not accurate, but compare them to IP addresses of the internet, same kind of thing. We'll have multiple wallets, we'll have multiple IP addresses. We're growing at twice the speed of the internet and have been for 10 years. This is la-la land.
No.
Bitcoin's price volatility reached new heights on December 5, with the cryptocurrency experiencing a 12,000, $396 intraday price swing that brought it briefly down to $91,463. This dramatic movement, which liquidated over $4 billion in leveraged Bitcoin futures, exceeded the chaos seen during FTX bankruptcy in November 2022. Despite the turmoil, Bitcoin's swift $5,160 rebound within 15 minutes demonstrated the resilience of the market, as buyers rushed to defend the critical $96,500 support level. Market indicators suggest that traders remain optimistic about Bitcoin's long-term upward trajectory. Margin futures and options markets all reflect confidence in the cryptocurrency's momentum. For instance, the Bitcoin long-to-short ratio on platforms like OKX currently stands at 20x in favor of long positions, signaling robust demand. Historical patterns show that confidence becomes excessive above 40x, while levels below 5x indicate bearish sentiment. The current ratio, well within bullish territory, reinforces positive expectations. Similarly, data from futures markets underscores the optimism of professional traders. At Binance, the long-to-short ratio stands at 1.65, above the 2-week average of 1.52, while OKX shows an increase from 1.15 to 1.37. Bitcoin options markets mirror this confidence, with the 25% delta skew at 8%, indicating heightened demand for call options over puts. This alignment across derivatives markets highlights a continued belief in Bitcoin's potential, even as profit-taking brings temporary dips to $90,000.
There's 500 million brokerage accounts in traditional finance across the world. China, India, the US, Europe, everything. 500 million. There's 500 million crypto accounts across crypto brokerages. 500 million customers. So we're already at the same size of the number of investors, and we're going to go well past it. And then we're going to see the size come across, right? Because it's been smaller, it's been more retail. But as you and I know, the bigger investors are coming. First it's the family offices, then it's the endowments, and then it's the pension plans, and then it's the sovereigns. And, so there's a flippening happening in the financial system that people are not aware of yet. It's interesting because I get lots of friends' kids. Like, can you speak to little Johnny about what he wants to do? He's at university studying whatever, and he wants to go and work for Goldman or work for a hedge fund. So I get them in and say, look, do not work in an industry that is in a secular decline.
Yeah.
You've got this amazing industry that's growing at 100% a year at a minimum.
Yeah.
It's all about finance and trading, but it's the future. Just please go and do this instead.
Yeah, I have one of those once a week as well.
Listen, Dan, fantastic conversation as ever. Yeah,
good to touch base. We just seem to do these every 6 months or so just to check in. I can't remember what last 6 months was, but it could not have been anything like this 6 months.
No, don't forget, it's very sideways. We had a
lot of sideways. 6 months from now, I think it could really be, gangbusters.
Yeah, I think so. 2025 is going to be an interesting year. So I think your numbers are too conservative, and I think there's a higher probability of the right tail, a slightly blow-offy cycle, not the big blow-off cycle, not the 29 cycle. That's what's in my head, but let's see how. You never know. We have to see what liquidity does as well.
Ethereum's recent price surge has reignited bullish sentiments among analysts, with many pointing to a potential impulse breakout that could drive Ethereum to $15,000 by May 2025. After weeks of steady growth, Ethereum has broken through the $4,000 resistance level, signaling a strong upward trend. Despite a brief dip to $3,615 on December 5, the cryptocurrency rebounded sharply and now trades comfortably above $4,000, with a yearly high of $4,098. An anonymous analyst, venture founder, highlighted that Ethereum is consolidating within a 3-year ascending triangle pattern, indicating a potential paradigm shift. This technical setup mirrors Ethereum's explosive breakout during the 2016 to 2017 cycle, with the analyst forecasting a price target of $15,937 within 2 years. However, maintaining $3,800 as a weekly support level is critical to achieving this trajectory, with $4,878, the current all-time high, likely to be retested first. Adding momentum to Ethereum's rally, spot Ethereum exchange-traded funds have seen unprecedented inflows, surpassing $1.3 billion since mid-November. BlackRock's shares Ethereum Trust alone attracted over $500 million this week, underscoring growing institutional interest. Meanwhile, Ethereum's decentralized finance ecosystem continues to thrive, with total value locked reaching $77 billion, marking a new yearly high. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.